all right, on the total assets only, total asset of the company, total asset of the company. Okay, so this is what equity share capital or just capital is. It is simply claim of owners in the total assets. Now we'll come back to this, okay, with an example to understand how does that mean, okay, the claim of owners in the total asset of the company. We'll take an example and understand it properly. Don't worry, we'll come back to this, but let's see the revenue definition first. All right, so did you understand what capital is? Simply whatever money that is invested by the owners of the company, that's capital. And the technical definition is they have a claim. It's a claim of owners in the total assets because the owners have a claim. Clear? Yes. So now let's see the revenue definition. See here, the revenue definition is very simple. Yeah, what is revenue? Income, simple as that. Yeah, it is the gross inflow of cash. Yeah, it's inflow, that's all. It's the gross inflow of cash. Yeah, either cash is coming in or receivables. Receivables means what? Receivables means someone has to pay to us. All right, yeah, someone owes us money, so they have to pay to us, so we are getting income, so that's receivables. Or other consideration, it can be, you know, see here, other consideration arising in the course of ordinary activities of business, such as sale of goods. Yeah, if we sell the goods, then we'll get the money, right? Yes, so sales is our revenue. And then rendering of services, if it's a service business, then we will render the services. We will not make sales, we will render the services and we will get the money, etc. And also interest received, all these things, okay, other things also, etc. means, right, interest received, rent received, whatever it is, dividend received, whatever we get, whatever income we get, that's called revenue. Simple as that. Yes, so now let's see one example to understand practically, yeah, all these elements. Yes, now here we have the example. See here, let's say you have a sole proprietorship business, you are a single owner and you started your business with 1 lakh capital. All right, now this is the balance sheet. Yeah, here we take capital, liabilities on the left hand side, and on right hand side we take what? We take all the assets. Yes, so now what I said, you have a business and you started your business with the 1 lakh. Yes, so now 1 lakh means what? You have cash of 1 lakh now in your business. Yeah, yes, and you have invested capital, right? So here you have to show the capital 1 lakh. Clear? So now how is the cash our asset? How is it our asset? That's because, see the definition of an asset. Asset is a resource controlled by an entity. Do we have control over this cash? Of course we have. Yes, you invested money here, so you have control over that. Yes, and future economic benefit. Do you have future economic benefit from that? Of course you have. You can do whatever you want from this cash. Yes, you can invest it somewhere, you can do whatever you want. So you have complete control as well as future economic benefit is there. So this is your asset. Clear? Yes. And how is this your capital? This is your capital because you invested this money. Yes, and now you have claim on the total assets of your company. Now total asset of your company is 1 lakh only, so you have entire claim on this 1 lakh. Is that clear? Yes, that's what I said in the definition of capital, right? Yes. Now let's say you purchased a machinery to do business. Yeah, you wanted to do some production or something. Yeah, so let's say you purchased machinery of 20,000. Clear? Yeah, and this was a cash transaction, you paid cash immediately, so of course your cash will reduce. Yes, your cash will be now only 80,000 because you have purchased machinery of 20,000. Now what is this machinery? This is an asset of yours. How is it an asset? Because you have control over it, you own it, right? And you expect future benefit from it because you will use it in production or something and it will help you to generate income. Yes, future economic benefit is there, so this is your asset. Clear? Then let's say you wanted to invest in a huge project, so you needed more money, right? So what you did was you went to a bank. Yeah, you went to a bank and you got a loan of 40,000. Yeah, let's say you got a loan of 40,000. Now what will happen when the loan is sanctioned? Immediately two things will happen. One thing is you will get the cash. Yeah, you will get the cash immediately. Yeah, it will be your cash, 40,000 cash you got. But now there is an obligation that is being created now. Yeah, immediately obligation is being created that you have to pay 40,000 back to the bank, isn't it? So this obligation is called what? This obligation is called now liability, a present obligation. Yeah, present obligation. Now obligation is there, you have to pay to the bank. Yes, you have to. Yeah, what you have to pay? You have to pay them cash, transfer an economic resource, that's cash. Why? Because as a result of past event, what was the past event? The past event was you took a loan from them. You took what? you took a loan from them. Yeah, this was the past event.